Ford is in full-blown panic mode, and for good reason. The automaker that once ruled American roads with trucks and muscle cars is now practically giving away vehicles just to move inventory. Dealerships across the country are flooded with unsold F-150s, Mustangs, and Broncos that nobody's buying. It's not just discounts anymore, it's borderline desperation. Some dealers are offering 0% financing for 7 years, massive cash rebates, and even buy one, get one half off promos on certain trims. It sounds insane, but it's happening. Ford's new slogan might as well be, "Please, just take the keys." So how did we get here? How did the brand that built America's best-selling truck for 47 years straight end up begging people to buy? It all started when prices skyrocketed over the last few years. Ford's lineup became more expensive than ever before. Average F-150 prices pushing past $60,000, even for mid-tier trims. Add soaring interest rates, tighter credit approvals, and shrinking consumer confidence. And suddenly, the dream of owning a Ford turned into a nightmare. Buyers walked away, showrooms went silent, and lots started looking like parking lots for unsold dreams. Then came the EV push. Ford threw billions into electric vehicles. The Lightning, the Mach-E, hoping to outpace Tesla and ride the green revolution. But here's the problem. Buyers didn't follow. The demand for EVs has cooled drastically. Ford overestimated the market, and now they're stuck with a pile of electric trucks that cost too much to build and too little people want to buy. Dealers are slashing EV prices by tens of thousands of dollars, yet they're still sitting on the lots like forgotten relics. Some dealers even refuse to take more EV shipments from Ford because they can't sell the ones they already have. And it's not just the EVs. Ford's bread-and-butter models, the F-150, the Explorer, the Escape, are feeling the squeeze too. Consumer reports are filled with complaints about quality issues, recalls, and rising repair costs. The average buyer is fed up with paying luxury car prices for vehicles that break down like budget rides. So Ford's response? Sweeten the deals to an almost unbelievable level. Dealers are throwing in free maintenance, extended warranties, and massive trade-in bonuses. Some are even offering to cover the first few payments just to close the deal. Behind the scenes, Ford's profit margins are collapsing. The company recently admitted it's losing billions on its EV division and that its gas-powered side isn't faring much better. Production lines are slowing down, factories are cutting shifts, and rumors are swirling that Ford might even shut down certain plants if sales don't pick up soon. The company's executives are walking a fine line between optimism and panic. They can't afford to lower prices too much, because that would tank profits. But if they don't, buyers just won't come. Meanwhile, rival brands like Toyota and Chevrolet are quietly gaining ground. Their vehicles may not be flashy, but they're priced right and reliable. Buyers looking for value are ditching Ford altogether. Even loyal Ford fans are starting to switch sides, saying the brand has lost touch with the everyday driver. Dealerships are sounding the alarm, telling corporate HQ that the old pricing strategies just won't work anymore. And here's where it gets wild. Some Ford dealers have started offering massive incentives on older 2023 and 2024 models just to clear space for the upcoming 2025 lineup. We're talking tens of thousands off sticker prices, free upgrades, and financing deals that sound too good to be true. In some cases, the incentives are so steep that buyers are essentially getting vehicles at cost or below cost. It's as if Ford has decided that moving units at a loss is better than not moving them at all. But this move could backfire badly. Once the public gets used to these crazy discounts, nobody will ever want to pay full price for a Ford again. It's the same trap that hit brands like Chrysler and Mitsubishi years ago, when constant fire sales destroyed their value in the eyes of consumers. Ford risks falling into that same pit, and if they do, it'll take years to climb out. And here's where things get even more interesting, because what's happening behind the curtain isn't just about slow sales. It's about a full-blown crisis in Ford's identity. Internally, executives are clashing over what direction to take next. Some are pushing to double down on EVs, insisting that the electric future is inevitable, and Ford just needs to weather the storm. Others are screaming that the company needs to pull back immediately, refocus on affordable, gas-powered vehicles before the entire customer base disappears. The divide has grown so severe that insiders say certain departments aren't even communicating properly anymore. It's chaos inside Ford Tower. And while that chaos brews, dealerships are left holding the bag. Dealers are being forced to accept new inventory quotas they can't possibly meet, especially with sales this low. Many are resorting to bizarre marketing tactics, raffles, giveaways, even free vacations with vehicle purchases, just to lure customers through the doors. You can find brand new F-150s sitting for months under the scorching sun, losing value every day, while Ford corporate insists that demand will bounce back any moment now. But it hasn't. And the truth is, it might not. Consumer confidence in Ford has taken a huge hit. The recall numbers have been staggering. Millions of vehicles pulled back for everything from powertrain faults to software bugs to airbags that don't deploy. Every recall chips away at trust. People who used to proudly say, "I'll always buy a Ford," are now whispering, "Not anymore." The new generation of buyers, Gen Z and millennials, don't have that same loyalty. They care about value, tech, and convenience, and Ford's constant price hikes and outdated designs just aren't clicking with them. And the EV gamble? It's turning into Ford's biggest headache yet. The F-150 Lightning, once hailed as the future of American trucks, has turned into a financial disaster. Production costs are sky high, demand has plummeted, and dealers are begging Ford to stop sending them Lightnings because they can't even give them away. Meanwhile, Tesla keeps slashing prices, Rivian keeps innovating, and Ford looks stuck, caught between a future it can't afford and a past it can't return to. But here's the part Ford doesn't want you to know. Some insiders claim the company is secretly planning to liquidate certain vehicle lines entirely. Models that aren't profitable might just disappear overnight. The rumor mill suggests that Ford could cut back its entire sedan and compact SUV lineup to focus solely on trucks and commercial vehicles, hoping to save what little profit remains. If that happens, it would mark the end of an era. The death of Ford's diversity and the beginning of a lean, survival mode company. The signs are already there. Inventory stacking up at record levels, massive price cuts, incentives that sound more like clearance sales than promotions. Ford's even considering reviving discontinued models under cheaper, stripped-down versions, almost like a throwback to when vehicles were simple and affordable. Think base-level trucks with minimal features, sold purely to get people back into showrooms. But will it work? That's the billion-dollar question. Because once a company starts giving away what it used to proudly sell, it's a clear sign something has gone terribly wrong at the top. And what's coming next could shake the entire auto industry to its core. Because if Ford collapses, or even stumbles further, it won't just be a problem for them. It'll send shockwaves through every corner of the American auto industry. Remember, Ford isn't just a car company, it's a massive ecosystem. Thousands of suppliers, parts manufacturers, transporters, and dealerships depend on Ford's sales to stay alive. If Ford scales back production or shutters plants, that ripple effect could crush small-town economies across the country. Communities built around Ford factories could face layoffs, foreclosures, and local business closures almost overnight. We're not just talking about cars here, we're talking about livelihoods. Wall Street is watching closely. Investors who once praised Ford's EV ambitions are now quietly pulling out, realizing those promises of record profits by 2026 might never happen. Ford's stock has been struggling, bouncing between optimism and panic, while analysts warn that if the company doesn't realign fast, it could become the next GM crisis of the early 2000s all over again. Some experts are even comparing Ford's current situation to that of Kodak, an old giant that saw the future coming, but couldn't pivot fast enough to survive it. And the craziest part? Ford's competitors are loving this. Toyota, Hyundai, even Chinese automakers like BYD are swooping in, offering cheaper, more reliable alternatives that buyers are snatching up without hesitation. These companies aren't just competing, they're taking over. Their production efficiency, lower labor costs, and government incentives make Ford's vehicles look overpriced and outdated by comparison. If this trend continues, Ford could lose a massive chunk of its market share within just a couple of years. Inside dealerships, the desperation is palpable. Salespeople whisper to potential buyers that you'll never see deals like this again. They offer test drives with zero commitment, throw in add-ons for free, and sometimes even cut their own commissions to close a sale. The energy that once filled Ford showrooms, confidence, excitement, pride, has been replaced by tension and uncertainty. Every unsold vehicle sitting on that lot represents another nail in the company's financial coffin. Meanwhile, Ford's CEO Jim Farley keeps promising bold action. But every bold action so far seems to dig the hole deeper. The company announced it would delay billions in EV investments, then backtracked a few months later. They tried to raise truck prices, but buyers fled to cheaper competitors. They even tried to spin the narrative, calling the discounts limited-time promotions. But nobody's buying that story anymore. Consumers see what's really happening. Ford is cornered, and it's running out of moves. And here's where things get truly alarming. Whispers from suppliers indicate that Ford is slashing orders for parts and components heading into 2026. That usually means one thing: production cuts. Some factories are already scaling back shifts, particularly in the Midwest, where Ford's biggest plants sit. Workers are nervous, unions are demanding answers, and management is staying eerily quiet. If Ford starts closing plants, it could ignite another wave of industrial unrest, just like what we saw with the UAW strikes last year. But Ford's bigger problem isn't just economics, it's perception. The brand that once stood for American toughness now looks shaky, uncertain, and overpriced. People don't associate built Ford tough with reliability anymore. They associate it with recalls, bad financing, and unfinished promises. That's a branding disaster that even billions in marketing can't easily fix. And the breaking point? It's getting closer than anyone realizes. Because if Ford keeps burning cash at this pace, we could be witnessing the early stages of a corporate meltdown that reshapes everything we know about the American auto landscape. Insiders are already saying it. Ford's costs are spiraling out of control, production is inefficient, and consumer trust is hanging by a thread. Every time the company tries to stabilize, another crisis hits, whether it's a recall, an EV delay, or a disappointing earnings report. It's like a domino effect, and the pieces are falling faster than Ford can pick them up. Even the dealers, once Ford's biggest allies, are starting to rebel. Many are publicly venting their frustration, calling out corporate leadership for living in denial. They claim Ford's executives are disconnected from reality, setting impossible sales goals while ignoring the real-world struggles of consumers facing inflation, job uncertainty, and high interest rates. One dealer even said, "We're drowning in inventory while they keep sending more." It's like they think trucks sell themselves. But they don't anymore. Not when every competitor is slashing prices and offering better deals on vehicles that actually last. Ford's once proud truck empire is now showing cracks. The F-150, long the crown jewel of American pickups, is being undercut by cheaper alternatives from Ram and Chevy. Even newcomers like Tesla's Cybertruck are stealing attention, not because they're better, but because they're different. Consumers are craving innovation, affordability, and transparency. Ford, meanwhile, is clinging to old strategies that no longer work in this new era of car buying. To make matters worse, the used car market is flooding with nearly new Fords. Owners who bought in 2022 and 2023 at inflated prices are now trading them in and taking massive losses. Used F-150s that once sold for $55,000 are now going for $38,000 or less. This collapse in resale value is killing brand loyalty because customers feel betrayed. They bought into Ford's hype, only to watch their investment tank faster than ever before. And once that trust is gone, it's almost impossible to win back. But here's the kicker. Ford's financial data shows that even with heavy discounts, they're not seeing the sales recovery they expected. Consumers are hesitating, waiting for even bigger price drops, knowing that Ford's desperation might push them to make even crazier offers. That hesitation is a death spiral. The longer people wait, the worse Ford's situation becomes. It's like everyone's playing chicken with the company's survival. Buyers waiting for the next deal, and Ford waiting for the market to turn around. Neither side is blinking. And while Ford fights for its life, other automakers are quietly preparing for what could be the biggest industry shift since the 2008 crash. If Ford continues down this path, competitors might swoop in to buy up assets, steal market share, and fill the void in rural and urban dealerships alike. Some analysts believe that in just a few years, Ford could shrink into a niche manufacturer, focusing only on commercial fleets, trucks, and specialty vehicles, while abandoning mainstream consumer markets altogether. That would be a stunning fall for a company that once defined American car culture. And it's not just speculation anymore, because behind closed doors, Ford's leadership is making moves that hint at something far more drastic on the horizon. Those moves are starting to leak out from inside Ford's own supply chain. Confidential reports suggest the company has quietly begun renegotiating long-term contracts with key parts suppliers, cutting commitments, delaying payments, and in some cases canceling entire component orders. That kind of activity usually means one thing: Ford is bracing for a slowdown. It's a preemptive strike to conserve cash, signaling that production cuts could be imminent. In simple terms, they're preparing to hit the brakes, hard. But these internal shifts are creating a panic ripple all the way down the line. Smaller suppliers who rely on Ford's steady orders are being squeezed dry. Some are already warning that if Ford slashes another round of contracts, they might have to lay off workers or close altogether. And once those suppliers go under, restarting production becomes exponentially harder and more expensive. It's a chain reaction, and Ford may not be able to stop it once it starts. Meanwhile, inside the company, morale has cratered. Employees are watching leadership shuffle plans week to week, desperately trying to project confidence while quietly tightening budgets and freezing new hires. Engineers working on next-generation EVs are being told to do more with less. Designers are cutting corners to save on materials. And the vibe inside Ford's design studios has shifted from innovation to survival. Everyone's walking on eggshells, waiting for the next big announcement that could change, or end, their projects overnight. Investors are also starting to lose patience. Ford promised bold returns from its EV push, but instead, it's reporting billions in losses year after year. The Lightning and Mach-E were supposed to be game changers, but production costs and slowing demand turned them into money pits. And now, investors are asking the hard question: how long can Ford sustain this? When a company is bleeding cash, handing out incentives, and losing market share simultaneously, there's only so long it can keep pretending everything's fine. But the company's biggest gamble yet might be just around the corner. Rumors are swirling that Ford is planning an emergency pivot, a complete restructuring of its vehicle lineup and pricing model. Insiders hint that the company could shift toward a subscription-based ownership model or direct-to-consumer sales strategy similar to Tesla's, cutting out dealerships entirely. It's a radical idea, one that could save billions, or blow up spectacularly. Dealerships, of course, are furious. They've spent decades building Ford's reputation in local markets, and now they're being told the company might sidestep them entirely. And it's not just dealers who are angry, customers are too. Many who pre-ordered vehicles have faced endless delays, last-minute cancellations, and surprise price hikes. Ford's inability to deliver on promises has created an online storm. Forums, social media groups, and Reddit threads are overflowing with frustrated buyers calling Ford unreliable, greedy, and out of touch. That kind of viral negativity can tank a brand faster than any recall ever could. Still, Ford's leadership insists that the worst is behind them. But actions speak louder than words, and everything we're seeing right now points to a company that's not bouncing back, but barely holding on. The cracks are widening, and if the next few quarters don't deliver a miracle turnaround, Ford could be forced to make a move so drastic it changes the company forever. Because the next phase of Ford's so-called recovery plan isn't just about price cuts or production tweaks. It's something much bigger, something that could redefine what Ford even is in the years ahead. So here's the truth. Ford isn't just fighting to sell cars. It's fighting to survive in a market that's evolving faster than it can keep up. Once the pride of American manufacturing, Ford is now staring down a future filled with uncertainty, shrinking demand, and brutal competition. The company that built America's favorite truck is now battling to keep its own wheels from falling off. If Ford can't turn things around soon, if it can't rebuild trust, cut costs, and reconnect with the average American buyer, this could be remembered as the moment the mighty Ford Motor Company began to crumble. But if they pull off a comeback, it could go down as one of the greatest turnarounds in automotive history. Either way, the next few months will determine whether Ford's legacy lives on or becomes a cautionary tale of what happens when a giant forgets where it came from. Thanks for watching. If you enjoyed this deep dive into Ford's current crisis, hit that like button, subscribe for more insane auto industry breakdowns, and let me know in the comments, do you think Ford can bounce back? Or is this the beginning of the end? Because the truth is, what's happening right now could change the entire auto industry forever. Stay tuned, because this story is far from over.